Good morning and welcome to the Energy Prospectus Group webinar hosted by VOLT Lithium Corp. This event is being recorded. During the presentation, all participants will be muted. If you have any questions you would like to ask, please type them into the chat feature. We will read and answer questions at the end of the presentation. Thank you so much for joining us today. Now here's Dan Steffens, who will introduce today's speaker.
Hi, everybody. Hey, thanks for joining us today. We're going to talk about one of my favorite topics, and that is the rechargeable battery market and how we can produce lithium from oil field brine water, which would be a major step forward in the lithium market, I believe. So I just want to remind everybody that I'm not a big fan of the Green New Deal, as you all know, but I am very bullish on rechargeable batteries and the huge market it has. Is because over 3 billion people on this planet do not enjoy the abundant and reliable electricity that we enjoy in the United States and Canada, and that we take for granted. I believe that all people want a higher standard of living for their families, and rechargeable batteries are a tool they can use to improve living conditions in countries with only intermittent electricity. So joining me today is Alex Wiley, the president and CEO of VOLT Lithium Corp, a small public company that is based in Vancouver. Alex has a proven track record of funding and building successful high-growth resource-based businesses. His background is in the oil and gas industry. But VOLT's lithium extraction technology, they call it IES 300, can be used to produce lithium from oil fields that have a high concentration of the mineral in the brine water that is being produced with the oil and gas. And this is common in a lot of fields. Now, a lot of fields don't have a high level of lithium, but they all produce, almost all oil and gas wells produce a lot of water eventually. Now, VOLT has an agreement in place with Cabot Energy to jointly develop what they believe is a world-class lithium resource play. It is located in the Rainbow Lake area in Alberta, Canada. The Rainbow Lake field covers 430,000 acres, where there's over 1,300 wells that are producing, and there is existing production infrastructure that can be used by VOLT. This is a key element of VOLT Energy's potential for investors. If VOLT's extraction process can successfully produce lithium from existing oil fields, it will reduce the capital expenditures required and the time required for their projects, and reduce the time to move forward with commercial lithium extraction operations. But before I turn it over to Alex, I want to remind everyone that batteries are not a source of energy. They are actually a source of energy demand. Even if half of this world's vehicles become EVs running on large battery packs, we will still need primary energy sources to produce the energy to recharge them. For many years, like it or not, the majority of primary energy will be coming from fossil fuels. The United States and Canada need to work together on a common sense energy policy that includes all forms of energy, because energy demand is expected to go up another 50% between today and 2050. So during this webinar, if you have questions, please type them into the chat box and we will answer them after the presentation. And with that, I will turn it over to Alex Wiley for an update on VOLT Lithium.
Thank you, Dan. Really appreciate that introduction and your lead into this discussion. And I guess to start, I'm going to go a little bit into my background. As you mentioned, I come from the oil and gas industry. Up here, our head office is in Vancouver. Where I'm based is in Calgary, Alberta, in the heart of oil country here in Canada. When we started VOLT Lithium a couple of years back, started with a few partners. One of my partners has a chemicals company in oil field services. He's got a team of PhDs that focus in chemistry. We also have access to we've got our lab up in the Nanotechnology Research Center up in Alberta, Canada. Those things are really important for us, I believe, as we got started. We believed from our oil and gas background that the key to lithium development in brines was really focusing on the technology, on the extraction side. We believed that if we could get the technology down pat, in terms of understanding how to extract from oil field brines, we would be able to move our business forward a little bit faster maybe than some others. So that's how we got started. The whole team is oil and gas background. And that, again, another key part is understanding reservoirs. I think that a key part of oil field brines and any brines that are subsurface is you've got to understand reservoirs. And so the team has a deep understanding of reservoirs, deep understanding of chemistry, deep understanding of how interaction of different minerals interact within oil field brines. So that got us started. Where we got to over, and I'm just moving a couple of slides up to introducing VOLT Lithium. Where we got to by last summer is we were having a lot of success being able to extract lithium from oil field brines in a lab setting. What we decided to do last summer was progress forward to a bench scale. A bench scale to us meant we were working with an equipment supplier in Canada. They build water treatment systems and filtration systems for oil sands companies, oil field companies up here in Canada. So we thought that was a natural fit because water treatment and filtration of chemicals is critical to our technology and our process. So as we moved into last fall, we were having successful results, not only in the lab, but also on a bench scale. We got to the point where we believed that we were far enough along with our technology that we decided to go into pilot production. So we announced in early March, or by late March, we announced that we were going into pilot production for our IAS 300 technology. And so I'm going to go through a little bit about what we've done in our pilot, how we've advanced our technology, and how we think that's applicable as we move forward. Key component for what we've done, we put out a press release this morning about our successful pilot results. So we've been able to not only show on a bench scale, not only still in the lab, but also now we've simulated commercial operations in our pilot, and we've been getting similar extraction results that we were getting in the lab and the bench. So that's been a huge milestone for us. It's been a technological breakthrough to be able to do this in scale. So we're now at the point where we've proved not only the technology side from an extraction perspective, but we've also shown that we can do it economically. A little bit about our company. We've got about 100 million shares outstanding. Our stock was trading around 45, 46 cents as of a day ago, and we're really moving forward with our business. Milestones to success. I guess where we're at from our company perspective is we've achieved a lot of results over the last year, especially over the past month. We've had success in our pilot operations, and now we're in the process of really analyzing what we've been able to accomplish and putting that into a preliminary economic assessment format so that people can see what not only our operating costs are, but our capital costs as we move forward. A little bit about the pilot and what our process is. So we have a two-step process for our technology. Step one is brine treatment. In our brine treatment, we remove contaminants from the oil field brine. This is a critical step for us and a critical part of our process. By removing the contaminants from the brine, elements that cause interference with the brine, we're able to have clean brine that we can now use for our DLE process. If we don't have that clean brine going into our DLE process, we just don't get the same results. And so we clean the brine to start, and then we move into step two where we actually do our DLE. Again, what we achieved was up to 90% recoveries from the oil field brine in a commercial setting. And again, this was a major milestone for us as we were simulating our production that we're going to be doing when we're going into commercial operations as we move into the second half of 2024. What does that mean? Well, what we've been able to demonstrate is that we've looked at when we did our testing for our pilot, we used a really low concentration brine. We did that because we wanted to make sure that we've had a lot of success at 120 milligrams per liter. We can operate for under 4,000 a ton, but we also wanted to see and demonstrate that we could do it on a real low concentration. So we were getting 90% recoveries at concentrations of 34 milligrams per liter. So what does that mean for us? From our perspective, what that means is we're able to pretty much open up any major oil field across North America that has lithium in it. And so there's a lot of oil fields, major oil fields that have lithium concentrations in the 50 milligrams per liter range. We can do that economically. And that's a big deal for us, because as we start to move forward, it's the process of reservoir management, extracting lithium as you're moving the fluid from subsurface to surface. So being able to do it at 34 milligrams per liter in a commercial setting sets us up to really grow through not only our oil field, but also other oil fields as we start to move the business forward. A little bit about our production agreement. So we signed a production agreement with, as Dan mentioned, with a group called Cabot Energy last September. The main reason why we did that were a couple things. One, by accessing their infrastructure, it's a huge deal. They've got over 100 million of historical infrastructure in place. As Dan mentioned, there's 1,300 wells ultimately on our property. Cabot controls about 100 of them. That's a big deal for us. We've really been able to leverage our business by understanding how production has happened. This field's been producing for 40 years. Understanding how the reservoir moves, how it produces, and really being able to test different parts of the wells without having to drill our own wells, so that we can really understand the reservoir moving forward. That has been a big help for us. The other thing that has happened is that regulatory. So we've been working with the Alberta government from a regulatory perspective, and lithium from brines is new. However, fluid movement up in Alberta and in the oil and gas industry is not new. And so they understand the infrastructure that's in place to be able to move the fluid, to bring it to surface, and to put it, when it's treated, put it back down subsurface. The other thing, so they understand that. They say, okay, well, we understand how the fluid moves. We understand how oil and gas moves. You're going to add some tankage and some treating facilities on site. We get that. We know how the reservoir works. We're comfortable moving forward with you. So as we move from our pilot to commercial operations, we've been in discussions with the Alberta government so they can understand our flow worksheets. That gives us a huge advantage. It's not going to take us years to get into development. Our plan is to get into development by second half next year, and we're working alongside with the regulators to do that. A final thing that it does for us, being with oilfield brines, I point to the middle picture. There's a flare stack. They're flaring natural gas there. Well, we can use that natural gas. We can use it for a cogen facility. Operations for lithium extraction take a lot of power. Well, by being at the oil field and also having excess natural gas that they're using, we can use a cogen facility, which dramatically drops our cost from a power perspective, which ultimately improves our economics. So we think it's a huge advantage being able to leverage off of oil and gas fields. A little bit about our land base. We announced last week that we've got 4.3 million tons of lithium in our reservoir. I mean, that is a huge reserve life, ultimately. I mean, that's over 100 years of production. So we've got a ton of lithium in here. We've demonstrated that we've got concentrations up to 121 milligrams, and we're going to continue to exploit the high concentrations areas of the field. Higher concentrations give better economics, so we want to be as profitable as possible as we move forward. And again, our reservoir has 99 billion barrels of brine, so there's a ton of lithium in our oil field, in our reservoir that we're leveraging off of. A little bit about geology. It ties in with the last slide. There are two main zones that we're really focusing on. One is the Muskeg, the other is the Keg River. As we go deeper into our reservoir, our concentrations improve. We're going to continue to understand our reservoir as we move forward over the summer and really try and leverage off of those high concentrations that we've been seeing as we've done our initial testing. And again, these are some of the highest concentrations for lithium we've seen in Alberta. Economics. I mean, what we had to do, as we've been talking with investors and our investors over the last couple of months, over the last 5 months, the question that kept coming back to us is, okay, we understand there's lithium in oil field brines. We understand there's lithium in brines and reservoirs, but can you do it? Can you technologically do it? And can you make money doing it? And so what we're hoping to demonstrate is that as we move forward and what we've done with our pilot, that we can successfully make money while we're doing this. Now, the lithium price last year was as high as 70,000 a ton. It's come off dramatically from that. We're not concerned from a lithium price perspective. We're really focused on the cost side. I mean, when you've got under 4,000 a ton for costs, it doesn't matter if lithium's at 20,000, we still make a lot of money. As we move into commercial production, our plan is going to be a little bit different than others. Our plan is to initially go into stage 1 commercial production. What that means is we're going to be producing about 1,000 tons per year to start. We will scale up to 20,000 tons in our project, but we're going to start at 1,000 tons. I come from an oil and gas background. My view is let's get into commercial production sooner. We know in any project that as you go into commercial, you learn as you go into commercial. So as we scale up from our initial, we'll continue to improve our process. And again, by going into stage 1, we make money. We think we can make 30 to 40 million cash flow a year. That's a big deal for us because we can now look at it and say, okay, not only are we in commercial production, we can scale up, but we can get into interesting types of agreements like offtakes, government funding, all types of things, because we will actually have commercial production and be able to deliver on our results as we move forward. A little bit about some of the competitors out there, and I know that the group has met some of them. My view is I think it's critical that all lithium companies succeed, especially with lithium and brine companies. There's a few that have been really setting the standard, Standard Lithium being one of them in terms of their demonstration plant. E3's got a huge resource and Lithium Bank's got a huge resource. You know, where we stand, we've now done our pilot. We're going to move into PEA and ultimately pre-feasibility as we move into commercial production. But there's a clear pathway to growth and success as we move forward. So that's just a little bit about VOLT and what we're trying to accomplish as a business. We've had a major milestone being getting through our pilot production, and we look forward to the next stage of the business and really ramping up our growth as we move forward. Thank you, Dan.
Okay, that sounds good. Okay, I got a few questions here that I came up with on my own, and then we'll go in what the other people have typed here. And if anybody comes up with a question, just you can find the chat box. If you go down, take your cursor down to the bottom of the screen, there'll be a link to the chat box, and then you can just type it in there. And just make sure that everyone can see it. And where it says 2, you have to go to everyone so we can see what you're typing in there. Okay. I like to, like with Cabot, this agreement you have with Cabot, when you guys go commercial, how are the revenues going to be split between you and Cabot and the other, owners in that field?
Yeah, so the way it works is Cabot owns the PNG rights, or the petroleum and natural gas rights, and we own all the mineral rights, including the lithium. So there is no cost sharing when it comes to our production. Okay. What we've decided to do is do a cost sharing arrangement. So we're going to help offset some of their operating costs for production, which is a huge deal for Cabot. If they can drop their operating costs, some of the wells that we're going to be bringing on will be extremely high water cut. Well, they become profitable wells. And so it's a huge win for the oil company because they become far more profitable than they were in the past.
Okay, yeah, that makes sense. So cleaning up the water at the front end is really a big deal, right? It's got to be really get the other minerals out, and so you're just dealing with the lithium.
It's critical, and there are some other minerals in there, but there's no minerals that create interference with the DLE process, the direct lithium extraction process, which is absolutely critical to the whole process.
Yeah. So I checked the market yesterday, and I noticed that the price of lithium has risen 37% in the last 30 days after it had declined from a peak in November. What do you think caused the decline since November, and what do you think caused it to bounce back up again in the last 30 days?
Yeah, I think it's hard to speak too much about last November. I can talk more about the last 30 days. What we've been doing is we've been starting to announce results. So we've only been public through, it was formerly Allied Copper. VOLT's only been public as a company since December. And so what we've been doing is we wanted to make sure we were far along in our process before we went public. So we've been starting to announce a lot of results since March. We've announced successful improvement in our technology to IS 300. We announced our resource report, and now we've got our pilot project out.
Yeah, well, I was really talking about the price of lithium itself, the commodity. And I think I read someplace where there was a perceived oversupply of rechargeable batteries or something. They were worried about the Chinese economy, and that went bad. But now new reports have come out about increased EV sales in April, I think.
Oh yeah, and on that perspective, Dan, I think that really points to why we need a North American solution. I mean, the market's it's really controlled a lot out of China. There isn't a lot of production in North America. It's not really a world market like you've got for oil and gas. And so I think as we bring on North American production, I mean, it'll change the price because there's going to be a lot of demand out of North America, especially for electric vehicles and other applications. And I think we'll get a more consistent tradable price. At 40 to 50,000 a ton, I think that's a huge opportunity for the brine companies. I would be very surprised if we see demand going down. Everything is pointing to much significant demand as we move forward. And to your point at the beginning of the conversation, this is not an and or situation with oil and gas. This is a recharging situation. We still have to recharge batteries. We have to find a source for charging the batteries. So this is just an additional piece to the energy platform.
Yeah, I totally agree. Everything I've been looking at says people across the planet want a higher standard of living. How do we get a higher standard of living? You have reliable and affordable energy. And that has to come from all sources. And, you know, a lot of the planet, I mean, probably 30, 40% of the people on this planet do not have the reliable electricity that we have. So rechargeable batteries, to me, and I've talked to the CEO of Nano One about this. I mean, just think if we had rechargeable batteries and powerful enough or strong enough to run our house for a few hours. So during a storm, your electricity goes out, you could run your house. Like I have one sitting next to my computer here that can run supposedly can run my computer for like 2 or 3 hours if I lost power. So what if you had one big enough to run your house? I mean, I think the market for that would be a lot. And so I just think there's just tremendous upside. What's the lithium price that you need, or go into when you guys go commercial, what are the capital costs to get to those various levels of production? How much capital do you have to go before you could even start operating it?
So we are going to be publishing a PEA over the summer.
Oh, okay.
And what we're going to be doing is we're going to be looking at our capital costs, not only from the initial commercial production, but ultimately to full scale up. Initial commercial production, you're in that $50 million range. That's including field development and getting the initial equipment. Our plan is to go modular. And so ultimately, when we scale up, will it ultimately cost somewhere in the range of 500 to 600 million? You bet it will. Our plan, though, is to gradually get there. I look at it similar to what you do in oil and gas. You start off with a single well, a single field. You get cash flow from that. We're going to have cash flow from our initial modular system, and we're going to improve on it. We're going to scale it up. When we scale up from initial commercial production to the ultimate 20,000 tons per annum, you've just got a lot more flexibility, and your capital is ultimately spent, but it's just spent while generating cash flow, which I think is a very efficient way to grow. And it's very good for the shareholders because you're not getting all your capital costs up front.
Right. And if you're going to be selling lithium for $40,000 or $50,000 a ton and your operating costs are $4,000 a ton, that's a heck of a profit margin.
It is. And there's a view. And if you look longer term, if you look 10 years out, I would say most models would tell you that the lithium price is going to drop significantly. It was 15,000 a ton a short while back. Will it go back there? I don't know. My sense is once there's more supply of lithium coming in the market, I think that it's going to be almost a self-fulfilling prophecy because there's going to be more demand for other applications of lithium. So I think that there's a huge runway going forward. But we have to plan on the cost side, and we have to be as profitable as possible in case the price goes down.
Yeah, I mean, rechargeable batteries and equipment and stuff that can run on these rechargeable batteries. That is a major paradigm shift in a lot of areas. So talk about, I'll get into the other questions here. Where's the upside in other oil fields? Where do you see like the top 10 or 20 oil fields that have lithium in them, high concentration of lithium?
High concentrations, it's more limited. Some of the other brine companies have got the mineral rights for some of the higher concentration fields. I mean, they're throughout North America. Mm-hmm. When you start looking at other oil fields like the Permian, which has, there's 50 milligrams per liter, the Montney up here in Canada with 50 milligrams per liter. If you can extract lower concentration brines, you've just opened up a massive market.
Oh yeah, then you got everybody, right? What of your cash operating cost, how much is attributable to the first stage, to cleaning up the oil, the water?
It's almost half.
Okay.
Probably about a third. So it's almost a third for the treating. It's the direct lithium extraction process is around a third, including the final steps for getting lithium chloride and then the upgrading process is just a little less than a third. It's really split throughout the each of the process.
Okay, and the stuff you clean out of the water, they're just going to pump that back into the zone?
Well, there's a bit of a depend. Yeah. Okay. What we will do is have compatibility with the zone. And so and we're going to have to make determinations of what we do. Now, up in Rainbow Lake, there's not a lot of fracking going on. It's the porosity and permeability, you just don't need a ton of fracking. But when you get into other oil fields where there's a lot of fracking that goes on, the brine or the water that we're going to have from the post-treating process will be frac spec quality, which is, again, a huge deal for the oil and gas companies. I mean, they don't have, if we can recycle a lot of their brine and be able to use it for fracking, then they're not drawing from lakes and rivers and whatnot. So it's a huge opportunity for the oil and gas companies. So we're really looking at that treating perspective to not only clean it up, but have it frac quality specs so that the oil and gas companies can leverage off it too.
Yeah, and that's a big deal. That's a big deal. I mean, frac water, the water costs are very expensive in the oil field. So, okay, somebody asked, what is the ramp up time for production at Rainbow Lake? So if everything goes as planned, when do you see first commercial production?
Our plan is to have first production by the second half of 2024.
Okay, so
we've got everything set up and all the specs ready. And I think that's a really important point to the pilot, because the equipment that we use in the pilot is going to be the equipment we scale up for commercial production. So we're not doing the big leap for us was going from bench to pilot. I've got a video on our website that shows the actual equipment that we're using that can scale up. So we tried to simulate commercial operations as much as possible so that we can fast track going into commercial production. So we're not years out. We're talking second half of 2024.
Yeah. Does the pilot produce any lithium you can sell?
Not enough. What we're doing so our end product from the pilot is lithium chloride, and we're using that to work with ultimate refiners or upgraders to create lithium hydroxide. Now, what we're going to do is we're going to produce lithium hydroxide on site. So the suppliers that we're working with, all the lithium chloride that we produce, the majority of it, we're working with various manufacturers to be able to treat it and to upgrade it. Once you get to lithium chloride, it's a pretty standard process to get to lithium hydroxide. The key is to be able to create that lithium chloride in sufficient concentrations, and that's what we've achieved with our pilot.
Yeah, so you're not selling, your production is not going directly to like Panasonic or somebody.
Well, ultimately it will, because we're going to upgrade. So it will go to, I mean, we've had interest from car companies. We've had tons of interest. We've had interest from other mining companies that offering off takes and what to
Okay.
do. Our view right now, Dan, is focus, show that we can do this, show that we can simulate a commercial setting, because when we ultimately start looking at off takes and other types of financing arrangements, I want to be able to commit to delivery schedules and not be held up. So going into that initial commercial production will set us into that stage so I can deliver on milestones as we move forward.
Yeah, and right now you don't see any problems with finding buyers for your production.
I mean, we
They're
started
waiting in
making,
line.
yeah, we started making some calls last summer and we had to stop. It just got too outrageous. The demand is just, it's there. Again, this is business number 8 for me. I'm a big believer in hitting milestones and being able to deliver on what I say. So if we start talking with groups about offtake agreements, I need to be able to commit to that. The process that we're going to commercial production will set us up for that.
Yeah, yeah. We talked to a graphite mining company a couple of weeks ago, and they were saying, you know, these battery companies are they're trying to find supply for all this stuff: lithium, graphite, copper, you know, the anodes and all that. There's going to be a shortage. So there's, you know, supply chain problems are going to slow this stuff down, I think, a little bit. Anyway, how many years would you say it would take you to get to the 20,000 ton per year level?
I mean, I think we will be consistent with other groups that have put out PEAs and have starting pre-feasibility studies about getting into that scale. I think you're in that 2026, 2027 range.
Okay.
I mean, it's early days to talk about that. It's really going to be each stage of the production. You know, I think though, it's really critical for us to be able to create 1,000-ton modular unit for commercial production, because I also see an opportunity where it's not just Rainbow Lake. If we can show commercial production, especially in some lower concentrations, we open up other fields. I'd rather plant my flag on a number of fields as we start to move the business, as opposed to just spending $500 million upfront on one.
Yeah. Well, can you do a deal where you just license your technology so you don't even have a bunch of capital costs at the front end?
We could. I'm a resource guy. I'm a big believer in having the whole picture. I mean, it's just like oil and gas. When you're doing oil and gas, you want to have access to the commodity and you want to have access to the reservoirs so that you can be as profitable as possible for your shareholders. My view, that's the approach to go.
Yeah. Oh, and this just popped into my head. Because I'm not familiar how Canada is going to tax this. Is it like in oil and gas? Is there going to be a like an Alberta royalty payment you have to make on that?
There will. So the way it works in Alberta, it's similar to what happened with the oil sands companies. So the royalty is 1% until payout. So until you've got all your capital costs covered, and then you move to a 12% royalty. So it's a very friendly jurisdiction.
Oh yeah, that's great. Yeah, down here it'll be, you know, 20 to 25% going to the mineral owner probably.
Well,
So,
and just on that, Dan. So all of our rights are with the Crown. They're not with fee title holders, and so we're not going to be paying lithium. We're not going to be paying royalties to any individual owners.
Okay, good. What is the company's current cash and expected cash burn in the next 12 months?
So what we did in late January, early February is we raised $4 million. That's a tiny sum for a pilot project. The reason why we could do that is because we weren't drilling wells. We weren't creating all new equipment. The equipment that we're using has been used for commercial applications, not for lithium, but other water treatment and filtration systems. So we were able to do our pilot on an exceptionally low budget. We've got about $1.5 million of cash left over, and our plan is to, over the next 12 months, really start to look into the engineering side, look into designing our plants. We're working with our equipment supplier right now about scaling up the equipment. I mean, we will have a cash burn rate as we move forward, and ultimately to go into commercial productions, it's about $50 million. Now, how we get there, there's going to be a lot of flexibility in how we do that. So we're just going to have to see what we do. Our plan is to probably raise some money over the next 6 months so that we're comfortable from a cash position so that we can execute on our business plan.
Okay, good. Let's see. I think we already answered this. Somebody asked, what's the upside on licensing this technology to oil companies?
It just depends who owns the mineral rights. And so I think what's going to happen is I'll speak to Canada because right now the oil companies don't have the mineral rights for lithium. So we're going to all be playing together, so to speak. Now, will that change? Will they buy up some lithium companies? Potentially. There's been talk about that in the US. So where it goes, we'll just have to see where we are.
Yeah. And so the field operations, is it you are going to be operating this process? Your people, your employees will be operating it?
That's correct.
Okay.
And again, it makes sense because it's a derivative from oil and gas. So we've got guys that understand how to operate oil fields. We understand how to operate facilities. There's a lot of similarities to the oil and gas on this.
Okay, but it's not a big labor intensive business, is it?
Not really. I mean, similar to oil and gas, it's not really labor intensive. I mean, as you're doing field development and growth, there is obviously a big labor component, but when you're in operations, it's not a high labor component.
Okay, so are you going to then be responsible for disposing of the water that comes through the process, all the way through the process?
It's actually Cabot's responsibility.
Okay. And then as far as like trucks will just come in to haul off the lithium or whatever.
Yeah, I mean, the process is we are going to create lithium chloride. And from our process now, we're going to bring in a modular upgrading facility that we will upgrade the lithium chloride to lithium hydroxide on site. And then ultimately that powder or the particulate that you've got that's going to be lithium hydroxide will be taken off in trucks. I mean, okay. They'll be expensive trucks.
Okay, I bet. Yeah. Is there any significant safety risk in this process?
I would say the number one risk that we face is saltwater spills on site, on location. That really is, and that's similar to oil and gas. And that's where, again, there's so many similarities. When you look at a HSE or a health safety environment process and what you have to do, we understand it. We understand how to operate leases. We understand you're managing brine for the most part. And again, your issue is saltwater disposal, but we deal with that every day.
Yeah. So this question, do you have to bring materials to the rigs, and what can upset your models?
Well,
you're just taking the water, aren't you? I mean, they're extracting the oil and gas, and then they're just giving you the water, right?
That's correct. I mean, we're getting the water at the wellhead.
Okay.
And so at the front end, we are going to be selecting higher water cut wells. When you get into mature fields, your oil cut goes down to 1-2%, even less than that.
Yeah.
Those are the types of wells, high volume wells. I mean, one of the things that we've seen that, and it's sometimes I don't necessarily say it gets lost in oil and gas people, but what happens is, as we all know, from a production perspective, the oil cut goes down over time. What we've seen is the fluid movement doesn't change, it's the oil cut that changes. And so the profitability from the oil company changes. Well, we're interested in fluid movement. We're all about fluid movement. So we want to speed up wells. We want to put electronic submersible pumps, as an example, downhole to speed up the well. That works not only for us because we're getting more brine on site, it helps the oil company because we're moving more volume. So both groups really win on this.
Yeah, it sounds like it. How much work and time and what steps are needed to see if your technology can be applied to another oil field?
Well, what we're doing is part of our process, the pilot that we've put into place, we're going to establish ultimately a permanent pilot. What that will do is allow us to test other brines from other plays, It's going to allow us to continue to improve on our technology with our media. There's a whole bunch of things that happen. So right now, we're at the point where if we see water samples from other fields, we can get a pretty good idea if we can extract it or not. It's really about the chemistry of the water or chemistry of the brine. That's the key piece. And that's what we've learned through our process over the last couple of years.
Yeah, I mean, I'm just visualizing. It seems like to me, you just have to get a lot of good water samples to know that they've got the concentration. So yeah, after you remove the contaminants from the brine, is there ways to get other minerals like magnesium in saleable form? Is that something you can see being another revenue stream?
It definitely is. I mean, and we're looking into that. I mean, there's magnesium, there's rubidium, there's all kinds of rare earth minerals. There's a whole bunch of opportunities. What we're doing today is really focused on our initial product being lithium. Will there be other revenue streams? We say yes, but we're not focused on that yet. We're focused on the lithium right now.
Okay, good. Because I know in standard lithium, the field they're looking at, it's already been, for decades, there's been a chemical company extracting the other stuff, but they never could figure out a way to extract the lithium and just kept injecting it back into the ground.
And that's what the oil companies have done. Yep.
Yeah, a lot of them, they don't know how to, if there's no process to get the lithium, they just have to pump it back in the ground. Have you been approached about buying your lithium? And you said yes, you've made some contacts, right?
Yep, we have.
How soon do you expect to produce the PEA?
Our plan is to produce it over the summer. Where we have a huge advantage right now is having those actual pilot results is critical. We've been working with our reserve engineers. We've been talking about next steps. And so we've got a real leg up. When we go into PA, it's going to be based on actual results from our pilot, which really helps the reserve engineers. It also helps from an equipment sourcing perspective and what we have to do. So we're far along the path, but my expectation is end of summer, we should be able to publish something.
Okay. And then with the PEA, is that what you use to raise the capital to go forward with commercial?
I mean, we're going to really have to look at all our options. It's definitely a milestone because we've got everything third-party sourced from a capital and operating perspective. I will say everything that we've done to date on our pilot and all our operating costs, every step of the way has been reviewed by our third-party engineers. So this isn't just us putting something out on our own. Everything's been externally reviewed so far.
Okay. Is there a chance to get government backing for this? Because, on that graphite company we talked to, they've gotten like $100 million worth of grants from the government up there.
Dan, it's a big opportunity. Absolutely.
Yeah.
It's a big opportunity. And when you look at our government in Canada, they've been, I mean, there's a lot of talk up here. There's a big investment in a Volkswagen battery plant in another part of the country. They still need the source. They need the lithium. So there's a huge impetus to back companies on our side of the industry as well.
And where you are in Alberta, is the Alberta government more involved than the federal government?
It's a combination. It really is.
Okay.
They are very interested in this.
Yeah, but Alberta, obviously, they're very friendly for oil and gas business and mining business and stuff. So it's a very friendly environment up there. If you're trying to do this, in Quebec, maybe you'd have a little bit of a problem.
It's and the government understands it. And it's not an and or an or with us and the oil and gas companies. It really is an and. We help them with their infrastructure, their life of their infrastructure, dealing with issues like abandoned wells. We reduce their operating costs. So, ultimately, groups that work with us, they've got an advantage over other oil companies because if you're, say, in the Montney and your production costs are lower because you've got someone sharing costs with you, well, that's a win for them too. So it's a real win-win scenario.
Yeah, good. Bill asked about scaling up production. So you're thinking about by the end of next year could be at 1,000 tons, and the year, the next year 2,000, and then if everything's going well, you're scaling all the way up to 20.
Yeah, our plan is
Like
going to
year
be
3
more
or
like,
4? Yeah.
our plan will be more like, let's get our first commercial operation running, and then we'll scale up quickly. I see it more going from 1,000 to 7,500 than up to
Yeah.
the 20 ultimately.
Okay.
Because we'll understand, it's going to be a modular based system that we use to expand and grow. And I think it'll give us a lot of opportunities to be smart with our balance sheet.
Yeah.
If you've got a cash flow company and you can demonstrate how you're going to scale up, it just opens up a lot of opportunities. And that's where things like government support comes in, offtakes come in. Like there's a whole host of opportunities once you can show that you're doing it.
Yeah, once you can show that it works, it opens up a lot of doors in. So Blair asked, how does VOLT's results today fit into the wider lithium industry trends and developments and wider critical mineral supply chain? I mean, you're not at this point, you really don't. I mean, this isn't like something that's going to, oh, this is a breakthrough and it's going to drive down lithium cost. I mean, it's got to really, really scale up to do that, right?
Okay, yeah, the demand as we move through the back half of the 2020s is really going to scale up. I look at it almost as displacement. I think if we can have a North American solution for lithium production, the car manufacturers, battery makers, be it the car manufacturer, battery makers, or Panasonic or anyone like that, having a stable supply out of North America is a game changer for them.
Yeah, we need to get supplies of a lot of stuff coming out of North America. We're very much too reliant on China. It's a scary situation I think we're in right now. So anyway, Fred asked, will the filtration media be available in sufficient size? So the equipment you're going to need to clean up the water, that's just currently available.
Correct, and same with the filtration. So
okay,
what we do, and the filtration system with the group that we're working with on the equipment side, it really is a key part of it. One of the things I haven't talked about from a technology perspective, where we're a little bit different than the rest, is we've developed a media that is in the 5 micron size range. So what does that mean? We've created a 3D spinal structure for our media that can hold up from an integrity perspective at the 5 micron level. What does that do for us? Surface area. By having a smaller media size, we get 800 times the surface area of others, and it really allows us to capture the lithium when we're in low concentration brines. So the group we're working with from a filtration perspective, their ceramic filters filter down to 0.1 microns. So it's a very efficient and technological savvy system that the group we're working with. And again, what we've done, Dan, is all the equipment that we're selecting is equipment that is either commercial today, different applications, and being able to lose commercial as we move into our production. I don't need to create technology from a mechanical perspective.
Mm-hmm.
We're creating the technology from the extraction perspective, which I think is the way to go.
Okay. Is your process patented?
It isn't, and that's by design. One of the things when you issue a patent is you have to give up all your secrets. And so we've taken the view that we want to keep our secrets proprietary. Once your secret's out there, people can reverse engineer it. Yeah, we will ultimately patent our process, and we're talking with our patent lawyers about the strategy for how to do it. It is pretty unique in terms of what we're doing, especially going at the 5 micron size. That's proprietary to us and what we've developed.
Okay. Okay. So we got one more question here. Will a guesstimate of $50 million capex and $30 to $40 million cash flow per year? Oh, that implies less than a 2-year payback on your capex and a 40% pre-tax rate of return. Okay, I think he's just given like his guesstimate of what your your economic report's gonna tell you, right?
Yeah, and I think, I mean, the way
the numbers look big. I mean, your gross profit margin looks huge to me, so it could pay out pretty quick.
They are big, and when you're doing the PEA, you're obviously looking up to full scale production, and so because so we're working with our reserve engineers to say, okay, this is how we're going to do it by a design perspective, but we have to show the whole picture ultimately. And so, as we get to the PEA stage and we start looking to publish, we're just going to be real smart about how we present it. We've got to show the entire process.
Okay. Do you expect the $50 million CapEx to qualify for the 30% Canadian federal government rebate?
We're going to look into that.
Okay.
I mean, there's a whole bunch of things that we're going to be looking into. What I can say is we're going to be as smart and efficient with all our spending as possible. To date, we've been able to do everything on a extremely low budget. That's by design. That's the team. I hope what our shareholders can see and future shareholders is that we are very efficient with our money as we move forward. Technology has been critical to start. We've been so focused on technology. Now we start to look at, okay, let's look at what our costs are going to be and where we go. But until we got to the pilot and announcing the pilot, we didn't need to speculate on that. Now we're moving to the next stage of our business, and we will.
Mm-hmm. Good. Well, our group is personally invested in several Alberta-based companies and primarily oil and gas, but we've also looked at several mining entities, both there and to the east also. So we're very familiar, and we've done quite well on some of our Canadian companies. So we're very eager to watch what you guys do, and I'm sure some of our guys will be investing in it. Let's see. Last question here. Publicly traded compatible lithium bank is working with Hatch. Is that a question or just a statement there, I guess? So. Yeah, did you get that, Alex?
Yeah, I did. I guess from our perspective, we're going to be, as we move into the next stage of our process, we're going to be selecting engineering groups to work with on the design and as we move forward. Hatch is one of them. There's a whole bunch of groups. So we're moving into that phase now.
Okay. And how many liters of fluid have you processed already in the pilot project?
We've done about 50,000 liters so far. What we needed to do and understand was, and the original plan was to process up to 250,000. What we determined as we got through our pilot runs, we figured out the operating conditions to be able to extract. And so we've been consistently achieving those numbers. Our team led by John McEwen, who's a PhD in chemistry, feels comfortable that where we're at in our process, we've got the operating conditions that we can now comfortably say that our technology extracts low concentration brines. We will continue to process more brine as we move forward, as we continue to improve and also continue to focus on economics. However, we've achieved a milestone to date.
Yeah, it really sounds exciting. I mean, you got a lot of potential with this. The numbers look good, and boy, we wish you the best, because we need to get more supplies of lithium and other important minerals. We need to start producing them in North America. We're way too dependent on China and some other places that are not our friends all the time. So anyway, I'll end it at that, but man, thanks a lot for hosting this, and we're going to be keeping a watch. I've put you on my watch list. We'll be looking at your stuff and publishing some reports on you ourselves in the next few months. So thanks a lot.
Really appreciate it, Jen. Thank you for your time and your group's time today.
Okay, thank you. And Sabrina, you can end it with there. We'll be sending out the link to this recording to our global membership. And that's when you're going to get the most bang for your buck on this, because most of our webinars get hundreds of views once it goes live on YouTube. So thanks a lot for everybody for attending. And that does it for today.